Hello, fellow investors. Welcome to Nordic Finans, where we help you realize your financial goals.
So if that is something you find interesting, please invest in the subscribe button and deposit a like on the video. My name is Marcus.
And I'm Lucas, and today we're going to talk about tax advantaged accounts or equity savings accounts. What are they, and how can you open one? But before we get into the video, please let us know down in the comments below what investment platforms you're currently using. Okay, an equity savings account or tax advantaged account here in Finland. How does it work? What is it, Marcus?
Yeah, a lot of countries have something similar to these kinds of accounts, and they are really new here in Finland. I'm not sure if this was the end of 2019 or the beginning of 2020, but it's very recent, this sort of account, even though I know they have existed in, for instance, Sweden, of course, the US, and I think you mentioned Canada as well. I think that one of the main benefits of a tax advantage account is that it's really helpful for you because it makes it so that whatever transactions you have on this account, for instance, that you sell shares, you're not going to get taxed immediately. You are only going to be taxed once you remove any sort of capital from this type of account. So that's really good, and I think it's the main benefits, especially for new time investors, is that what it basically does is that this removes the equation of taxation for a time. So that you can then, when you're ready, when you feel that you are ready, you can withdraw money from the account and then be taxed.
So just to represent this better, I think a really great allegory for this that we talked about, Marcus, earlier was like a little space shuttle almost that you take away in it, and then once you're up in the air in space, you can buy and sell shares freely and you don't have to worry about tax. And then once you land the ship and you take out the money at the end, then you're going to pay tax on it.
Yeah.
So as long as it stays in the account, don't have to worry about tax, but then when you take it out, that's when you pay tax.
Yeah. One of the main things, though, that you have to be aware of with these tax sharings account is that you can only deposit money up to 50,000 euros into this account. So what this means is that you can only put your own money that you transfer from one account to another, you can only put in 50,000 euros, but the amount can go above 50,000 euros through growth, for instance, on the account, or in the fact that you have dividends that add to this account. And what is important here is that once the dividends add to the account, they are not taxed as long as they stay on the account. So you can have a very good option here for long-term investments and long-term growth in this account without being taxed all the time. So this is a really great benefit, I think, of the tax advantage account.
Yeah, and that's actually one thing I've been thinking about with this type of account as well, that we talked in the past privately among ourselves that, for example, I don't really like dividends as much, and I think you said the same quite recently, because you sort of get punished whenever you get the dividends because those are taxed, so you don't have the same ability to grow your position since all of the dividends you get out of it are taxed. But if you would have used this account as sort of a dividend account, that is something you could do, right? Because then the dividends wouldn't get taxed and you can just reinvest them directly.
Exactly. That is exactly how you can do. And I think that's one of the main benefits with this account. Because if you do it on a regular account in Finland, you will be taxed, even if you set it up so that the dividends are automatically reinvested into whatever shares you have. So this is really a great benefit of the tax advantage account, which you can get, that you can place dividend stocks into this portfolio in your tax advantage account, and they can grow, especially over long periods of time, decades even, and you will really see that growth, that the dividends you received on that account was never taxed. This is, of course, a position that will always grow in that case, as long as these companies are paying out dividends and that they are doing all right. However, there are a few more things we should say, like how the basic account works. So you can only have one account at a time, and most likely, like, there's no rule that it has to be a Finnish bank that you have this tax advantage account. But the thing is that most accounts that offer this type of account, the tax advantage account in Finland, are Finnish brokers or Finnish banks. So currently there are not many options to choose if you want to have this kind of tax advantage account. I know Nordnet has it. I know that most of the banks offer these kinds of accounts also in Finland. But yeah, it's mostly Finnish. You cannot set up a tax savings account, for instance, through eToro or the Giro or Trading 212 or any of the other platforms we have talked about, because they simply don't offer this kind of service. And then here we also have that, like Lucas said, you can only actually trade shares here currently. I know that there was speculation that it will be included more types of equities in the future, like index funds or something like that. But currently, sadly, it's only shares, like nothing else. And another thing that I personally find a bit annoying, because I had hoped that I could transfer the shares I have on another of my accounts to this account, that's sadly not possible. The only thing you can transfer to your tax advantage account is money. So you can only transfer money into this account, which you then use to buy shares on that account. You cannot, for instance, transfer shares that you already have to this account and then start getting dividends here, tax-free, that can add to your position. That's not possible. The only thing you can add to this account is money, which you then can use and start building a position there.
If we move on to when you remove money from the account, it is going to be taxed as normal.
One important thing here is that you will only be taxed on the gain, precisely like on any other actually type of capital gains. So you will not be taxed for what you spend in order to get this position. So if you remove, for instance, 30,000, but you spend 15,000 to buy those shares, you will only be taxed on 15,000 of that amount.
Yeah. So how is this then taxed? This is going to be taxed at the end. It's going to be taxed like normal capital gains, meaning that up to 30,000 euros, it's going to be taxed at 30%, a flat out rate. And then above 30,000, it's going to be taxed at 34%. One thing to clarify here, Marcus, help me with this. So say that I have 60,000 in total. I have deposited 50 and but that's bad. Say that I have 60,000 in profit. Pure profit 60,000. So all of that is supposed to be taxed. But is all of that going to be taxed at 34%? Or is half of it, like is 30,000 going to be first taxed at 30% and then the other 30,000 going to be taxed at 34%?
This is a really good question and it has a really easy answer. The answer is that you are correct. The 30,000 of the 60,000 will be taxed at 30% and the amount over 30,000 will be taxed at 34%. So you have two tax rates for the separate parts.
Just to make that clear, because I haven't been sure about this, and this comes up again and again and again, because it's the same tax rate for all of the capital gains.
Exactly. So we have not maybe clarified this enough in our previous videos regarding capital gains, but like Lucas just said, that is exactly how you will be taxed. We also had a slight error here, which I removed. There was some information regarding that once you remove amounts from your equity savings account, that they would actually be taxed like dividends, so that 15% would be tax-free and the rest would be taxable. That was sadly not true, according to Vero anyway. So you will pay the 30% on the full amount when you decide to remove money from your account. So then we're going to go into how you actually transfer money to this equity savings account. And it's pretty straightforward in most places. For instance, you can use your own bank that you currently have, or you can use Nordnet, which we have also recommended, and we actually show you how to do when in our how to set up a Nordnet account. So there you can set up money, and once again you can put in a maximum of 50,000 euros. Now, there is also a possibility to, once you withdraw money, there are ways that you can then reinvest money into this account. We're not going to get into that right now because it's a fairly complicated process.
If you would want a full explanation, we can probably do that, but it would have to be in a separate video.
There is something you should be aware of when doing this account, and we will go more into it in the end of this video where we talk about the advantages and the disadvantages of this type of account. But before that, we're just briefly going to mention that the losses on these types of accounts are not deductible unless you close the account. What this means is, we have even written out here, no YOLO stocks. What this means is that you really don't want to have this as a short-term, like, very risky type of account, because you cannot really withdraw the losses you make on this account like you normally can in order to lower, for instance, your other tax rates, for instance, that you will be taxed on. You can only leverage the losses on this account if you close the account, and we assume that you really don't want to make many losses. This is really a long-term type of account where you, for instance, want to buy stocks that pay dividends and you plan on holding them for a very, very long period of time, not these very risky stocks. So be aware of that. You cannot use it for tax purposes.
And 2 quick points about that still is just that's just the flip side of the coin, basically. This is why you don't have to pay tax on this account, because you don't pay any tax on it before you take out money. And that also means that you can't write off any losses, you can't deduce them. Moving on to my other point, if you're wondering like what do you mean, how could I leverage losses, we have a full video on that, a great video, which we will link to here. So if you're wondering how you can deduct losses as a Finnish resident in your tax forms on capital gains tax, we have a great video on that, so I'll link that as well here.
Yeah, good that you clarified that actually, that you can use losses in normal cases, but that does not apply to these equity savings account. However, finally now we're going to talk about some of the advantages and the disadvantages. We have actually listed them here. So actually I would want to start off that we would actually argue that most investors in Finland probably are going to want to use this type of account, because it's really a massive benefit, because there are so many taxes in Finland, for instance, on dividends, on any type of capital gains when you sell your stocks and all of this types of stuff. Especially for a new investor, I think it's a really good idea to start out here, because, for instance, in the beginning, in the first few years when you're starting out investing, you don't really have to worry about tax in this type of account. You can just invest into shares you like, preferably long-term positions. You can set it up so that the dividends automatically reinvest into that account, and then you will not have to care about tax at all for a very long time. So I think this is a really great place to start as a new investor as well. If you are worried about taxes, I think this could be a great option for you. However, I do want to mention a few disadvantages. One of the major ones is, of course, that it's only applicable to some brokers. You cannot use equity savings account with the Giro, you cannot use it with eToro, you cannot use it with Trading 212. And that's a pretty bad thing, I think, that if you're going to invest through this equity savings account, you're going to have to pay some significant transaction fees unless you make pretty large investments at a time, which is what I would recommend, because you really don't have much an option, because you have to use these brokers, which have relatively high transaction fees. So that's definitely a minus. Then another incredibly big disadvantage for this account is that you cannot invest into ETFs or any type of funds, so no index funds. I know that this would probably be a thing that a lot of people would want to do. Sadly, this is not provided right now. I think I've heard some speculation that it might be coming, but it's not here yet. So this is only for shares. And of course, shares are in general much more risky than, well, even ETFs and index funds. So this, you have to bear some risk however you plan on using this account, because the only thing if you want to have really like safe investment is invest into really safe companies, preferably ones that pay dividends. But with stocks you can never be 100% certain, or even close to 100%, which at least with some index funds there is very low risk. So that is certainly something that you have to be able to tolerate some risk with this type of account.
So then finally also that you cannot transfer shares that you already own into the account. You have to first transfer money and then buy, as well as you can only have one of these accounts at a time, which of course makes sense since you can have a maximum of 50,000 euros. So it wouldn't make much sense if you could just bypass that by having several accounts. I would like to add one personal disadvantage that I think, which is kind of you might not think of it as a disadvantage, but if you know anything about investing and have read investing literature, it is really hard to invest in the first place, especially if you get into the whole trading mentality. And I feel like the temptation to try to time markets in tax advantaged accounts where you don't have to worry about taxes is a lot higher, because you might say to yourself that whatever, I'll just sell this now high and then I can buy something else low and it's going to be great and I'm not going to have to pay any taxes and I'm going to make so much money. And it's going to bite you hard in the ass, because first of all, you're probably not going to be good enough to do that, because basically no one is. And second of all, you're going to have to pay fees every time you try to do that. So that's why we kept on recommending dividend paying stocks here or shares, because I really feel like that's the way to go with this kind of account, because I really like to recommend that. Want to try to find good things that you buy and then you just hold them, because human psychology is really not good at investing. It's not, we're not built for this kind of game at all.
Certainly, and once again, I want to plug the fact that you cannot deduct losses on this type of account, which we mentioned earlier, and that certainly is a disadvantage. So that is what I wholeheartedly agree with you, that this is a long-term... Okay, so finally, we're just going to summarize what we went through today. So we talked briefly about what a equity savings account or a tax advantage account is. We mentioned how it works, like the 50,000 euros amount, and how you can set it up, and which brokers you can use. Of course, this is only in Finland. That is another big thing. There are other kinds of accounts out there in other countries, but we personally don't know a lot about them, so sadly we can't talk too much about those.
I've done a little bit of research. I'll just real quick add that in the gist of it is very much the same. There's a few details that usually differs, but like this is the general way that they tend to work. So
yeah, they usually tend to favor long-term investing, I'd say, in some way. And they could be a good help for instance, beginning investors. Anyways, we also mentioned that you have to transfer money, you cannot transfer your whole position, and that you cannot deduct losses on this type of account. And then finally, we went over some of the main advantages and disadvantages of the account. But to summarize, we think that this is definitely a very good tool that investors in Finland should consider, especially if you're new and worried about how you will be taxed. This could be a good way to ease yourself into investing, I would say.
Yeah, I agree. And with that, please, if you've had any value or if you got any value from this video whatsoever, please leave a like on the video, subscribe, and let us know in the comments down below suggestions. What other videos would you like us to make? Do you have any positive, negative feedback? We'd love to know that. So yeah, with that, I guess all that's left for me to do is wish you guys happy investing.
Happy investing, guys. And remember to save on your taxes.